Hi everybody, I'm Dale Pinkert. I'm the anchor here in FX Street's live analysis room. This is our pre-market roundup. I have to say that I was right about a couple of scenarios from Monday, but even a broken clock is right twice a day. So we'll start off with the dollar index. On Monday I said I expect the dollar to rally into the Fed. We're a little more than 24 hours away from this Fed meeting. I'm still looking for a continuation. Talked about that I don't think the market is expecting a Fed rate hike, and everyone's saying it's already in the market in Forex. I disagree. We get that Fed rate hike. I'm looking for these highs to be violated, possibly go to 97.50. And let's get to our instruments. So starting off with the euro. Said that I thought a lot of people would be taking profits on their short dollar position into the Fed. That's happening here in the euro. We have this divergence here. We're underneath some significant support here at 1250. Actually, this trend line, and I talked about this had to be held, and then the next trend line comes in a shade under 112. Now, what's significant about this trend line in the euro, and I'm not saying trade in front of the Fed, is that it's anchored against the Draghi low. So if we start breaking down here under 112, 111.80 looks to be the level. I do expect the Draghi low to be taken out. Potential target areas could be in here, shade under 109. And remember, everything will happen. Anything will happen tomorrow on the Fed. I really suggest people be flat and not play roulette. The pound is bouncing back. So the pound actually looks like it's going to make a move to new highs. So we were right to get out at 470. I didn't recommit, but I have to congratulate Alienovich on his buy. He posted it yesterday in LAR. But we have been talking about the short side of euro pound. So with euro lower and pound higher, big move to the downside, never took out the highs. This too was a call by Alien. And then I started talking about it as well. Nice break. Not sure if it's done yet. I have some convergence around the 72 level. Some people are going to call this a descending triangle. Just draw a horizontal line right here. That could take us all the way back down to the breakout. Here's the daily. The breakout out of the falling wedge. That line's going to come in underneath the 50-day moving down around 71, which would be a measured move. You just take this 72.50 to 74. That's 150 pips. 150 pips under the breakdown takes you to 71. Also said be patient about shorting the yen, that I was expecting the S&Ps to rally and that there'd be better shorting opportunities in the yen. Still doesn't look ready to me. If I'm right, the S&Ps will break out over that 1990 level, head into the 2000 range, 2040, 2050, and US dollar yen should be a better short. Possibly as high as 2178 would be enough to clear out the bears here, but you can't rule out 76 back at 123. Depends on the extension and spike in the S&Ps. We have a great guest today, very popular every time I've had Ed Matz at Ed Matz. He's gotten record views. He has a great fractal he's going to show about Janet Yellen. He's going to be talking about what happened last year with the Nikkei and the yen, but what a great time to be discussing a fractal of the Fed. So Eddie can find fractals on everything. Didn't know you could find a fractal on Janet Yellen. So join us in a couple of hours as I have a discussion and interview with Ed Matz, and I'll see everyone in the room. Good hunting, everybody.